Hello, welcome back to Audit and Assurance class. We'll be looking at the seventh module, which talks about audit completion and reporting. Audit completion and reporting. It is not only about verifying and making sure that everything is okay. It is also about completing it and reporting it to the management for better decision making. And that is why we need to look into this. The module helps to be able to perform critical completion procedure and also evaluate audit evidence and aggregate misstatements and also determine the appropriate audit opinion. And lastly, we have a structure and draft clear compliance audit report, and this is more it is in the notes. We just talk briefly on all of this. Let's look at critical audit completion procedure, and this is actually the wrap-up phase. And to do this, the following key steps are very important. The first one is subsequent event review. That is, the auditor have to identify events between balance sheet dates and audit report date. And this is seen as type 1, which is adjusting, and it requires a FS adjustment and in likes of settlement of year-end lawsuits and the likes. And type 2 is non-adjusting, and which may require disclosure only. That is, example of this is post-year-end fire. And another phase is the going concern evaluation. And under this, there is an assessment of if entity can continue for at least 12 months. And indicators to look are the recurring losses, debt covenant breaches, and negative cash flow. And lastly, on that is the audit response. The auditor will evaluate management plan, consider disclosure, and determine opinion impact. Another key step in this phase is the written representation. Written representation, which is a formal letter from management confirming key responsibilities and facts. Confirming key responsibilities and facts. And the purpose of this is to corroborate evidence, classify management accountability. It corroborate evidence and classify management accountability. And refusal to provide this is equal to scope limitation and possible disclaimer of opinion. As per the final evidence evaluation and misstatement aggregation, before forming an opinion, auditor must do the following, perform the following. The first is to evaluate sufficiency and appropriateness, and this deals with has enough reliable evidence been gathered to support the opinion. Also, he must aggregate identified misstatements, whether they are factual, that is non-error, judgmental, from unreasonable estimates, and projected from sampling. And also, he must communicate to the management and evaluate uncorrected misstatements. You need to evaluate all uncorrected misstatements, and under this, he compares aggregate amounts to materiality and consider qualitative factors like height, breach of covenants, and decision points. Do the questions need to be answered? Do uncorrected misstatements individually or in aggregate cause the financial statement to be materially misstated? This is very important. It forms the decision to be made. We have types of audit opinion, and this can be divided into 4. The first one is unmodified, which is clean, and under this, it is issued. When issued, is FS are free of material misstatements. When unmodified audit opinion are issued, that means the FS are free of material misstatement. Financial statements are free of material misstatement. And keyword under this is present. It's present fairly in all material respects, and impact on users is high confidence. It provides high confidence. And for qualified audit opinion, these are issued when material misstatements, but not pervasive, or scope limitation, not pervasive. And words like except for comes in there, and this calls for caution in specific areas. And for adverse audit opinion, this deals with the material of and pervasive misstatement. That is, financial statements are not fairly presented, and words like do not present fairly then comes in there. Do not present fairly comes in there, and the financial statements are not reliable in this instance. And the last one is the um, disclaimer. Disclaimer. And for disclaimer audit opinion, it is issued when um, it cannot obtain sufficient evidence. Then the auditor cannot obtain sufficient evidence. And the words like do not express an opinion can be seen, and impact on users, no assurance provided. So from this, we will see that it is a unmodified or clean audit opinion that is without any form of doubt. It provides high confidence in the users of the information. You have the structure of standard audit reports, and for this, a standard audit report structure ensures clarity, consistency, and understanding across jurisdiction, and each section clearly communicates the auditor's opinion and responsibilities. It contains the title, which clearly identifies it as an independent auditor report. That word independent is very, very important, emphasizing objectivity and distinguishing it from internal audit reports. And the next is addressee, and then it must show that it's addressed to shareholders or those charged with governance, aligning with the engagement letter and the legal relationship. Another is the opinion section. And under this, it states the auditor's judgment on whether financial statements present fairly. It shows whether financial statements present fairly in all material respects, specifying the entity period and statements audited. Another aspect of this is the basis for opinion. Another structure, another aspect of the structure for a standard audit report is the basis opinion, and it explains audit conducted by ISAs, confirm independence, and states that evidence obtained is sufficient and appropriate to support the opinion. Next is the key audit matters. And it has to do with the listed entities, and it highlights most significant audit issues requiring attention, enhancing transparency into the audit process and challenges. And also, we have the responsibilities of management included in the audit report, by which I outline management's duties to prepare accurate financial statements, maintain internal controls, and access going concern status. And then we also have the audit responsibilities stated in the audit report, and this describes the objective to obtain reasonable assurance and issue an opinion, acknowledging limitations in detecting all misstatements. And we also have the audit report date, and it shows the dated it's stated after sufficient evidence is obtained, confirming statements are finalized, and establishing the auditor's cutoff for subsequent events. And lastly, auditor's signature and address. And it shows this signed, it's actually signed by the auditor or firm, and includes location details to establish accountability, and provide contact information. Let's look at emphasis of matters and other matter paragraphs. And this is adding content without modifying the opinion, adding content without modifying the opinion. And the first one is emphasis on matter paragraph. And this highlights a material matter already appropriately disclosed in the financial statement. And common use is under the going concern uncertainty when liquidly disclosed, and it is placed after the opinion section and does not change the opinion. It does not change the opinion. And other matter paragraph, and this refers to a matter not presented or disclosed in the financial statement but relevant to users' understanding. Example of this is reporting on prior period financial statement when current period only is audited. And these paragraphs enhance transparency without qualifying the opinion. In conclusion, completeness is rigorous, not just finishing paperwork. It involves specific procedures and judgment. Opinion determination is a structured process based on materiality and pervasiveness of misstatement or scope limitation. And the audit report is a key deliverable. It must be clear, structured, and compliant with standard. And lastly, communication is multifaceted, and formal reports plus the KMs plus emphasis of matter plus communication with governance is very, very important. All well-executed completion and a clear report are what makes the audit valuable to stakeholders. Thank you for listening.